It's January 9th, 2011, and we're looking at a chart of the Euro US dollar monthly. We're starting off with these higher time frames to try and develop an understanding of what's going on, in the big picture. A lot of times the bigger money, the funds and the banks start to, participate on these larger time frames, and that's what, causes, kind of the sporadic movements on lower time frames. So, especially keeping this in mind and also taking into account the fundamental factors by looking at a larger time frame, it can help us, develop a better trading plan intraday. So it's important to note here, first and foremost, the major swing points. We do have these smaller swing points here, such as here, we have like this higher swing low, higher swing high, higher swing low, higher swing high. But, what I'm more interested in is the overall trend here. So, if we start to draw these in, we have a swing low here, we have a swing high, and so on and so forth. We can put in these major ones on this chart. All right, and the next thing we can do from here is really start to kind of pick this thing apart. So we can see here that we had these series of higher swing lows and higher swing highs through here. And then we were able to maintain that all the way through probably 2008, early 08, before we had a significant drop in the markets. And once again, we also managed to maintain that higher swing low. Now, it's important to note here that we did come up from there and correct. We actually made a lower swing high. So, up until through here, essentially we're in an uptrend, and once we made this lower swing high, we needed a lower swing low to follow that to confirm that we had transitioned into a downtrend. Again, we did get that here. You can see this is a swing point. We managed to close below it. On this candle right here, we spent about a month below it. All the price action here before putting in a reversal candle, and price did shoot up to the upside. Now, keeping into account that we now have this lower this downtrend with these lower swing lows and lower swing highs, the next logical move was to make a lower swing high. That's exactly what we got, and you can see that price has rolled over since and is now moving down quite nicely. So taking this to a weekly chart and trying to apply the same concepts that we just saw on the monthly, we can begin to see that the price is breaking down, and essentially the reason we use lower time frames is to get better entries and to adjust our risk to reward. But keeping these higher time frames in mind, there's some banks, particularly I know Barclays Capital was looking for this trend line right here as a fourth quarter target. Again, still maintaining that series of lower swing lows and lower swing highs, but price did not make it that far. In fact, we made it to about roughly 143, still about 200 pips off from their target, and that was all we saw on the upside there. So up until about last week, on the near term, I was still convinced that we were seeing these higher swing lows and higher swing highs. And again, I can point those out. If we just draw them in real quick, we can see that right here we have a swing low, swing high, swing low, swing high. Now, technically speaking, on the larger time frame here, on the weekly, we are still maintaining a series of higher swing lows and higher swing highs until we breach this swing point right here. But looking at the candlesticks themselves, we can see that we had a nice reversal bar that formed right here. Right, and also we can go ahead and draw in some more trend lines to try and clear this up. We had this swing point right here and this swing point right here. Right, so you can see that when price did break below here, we kind of came back, very nice movement to the downside, a push up, and in some sense we just retested what was previously support and function as resistance before coming back down again. But again, using the individual candles, just for some candlestick analysis, we can begin to pick this thing apart, and we can see that, okay, we had this nice bullish candle here, and again, anyone who's using Fibonacci's will most likely buy that initial pullback down here because it's a halfway back, 50% retracement, and these often tend to hold in uptrends. When you have that, price often comes down, goes halfway back, and then continues up in the previous direction it was in. And when these are violated, often you see that the trends do reverse. So again, anyone who got long, let's say someone bought Fibonacci movement, just hypothetical situation, trying to imagine what buyers would do in the situation. So anyone who got long here would initially put a stop here, and there's a couple ways of doing this. Some people might actually trail the weekly candles, and they would put a stop here and get stopped out on that. And the other way of doing it is actually trailing the swing points. So probably if we went on to a daily chart, we can get a better idea of where the swing points are, as everything will be a little bit more spread out. So let's go ahead and do that, and switch over to a daily chart. All right, and over here you can see that price essentially came up here and then pushed down and formed some sort of a range. So that range is pretty much roughly from that high to this low, and price managed to bounce around here for quite a while, from about end of November all the way to this month, and finally we managed to break out of that range here, breaking these swing points. But this by itself is a great trading opportunity. You can see that we came here, we made a swing low, we made a swing high, and then we made a higher swing low here. Right? So anybody got long off this support level halfway back, whatever it was, most likely to move their stop below here, as they saw price was now moving up again. As price action moved up, we had this nice piercing of the swing high, and before the close there, we couldn't hold on to it, and we closed back below. So this right here is a reversal bar, and as you can see, we had a nice push down following that. We broke this swing point. Anyone who was long essentially got stopped out. Who's practicing at least good money management got stopped out of their trade. Now, with that, once you see that any sort of a push up is a nice selling opportunity, and again we had this nice little correction here, back into resistance, before we had a nice push down here, and then again a reversal bar to the upside. So from there, the market managed to make it back up, back to the top of the range. From the top of the range, you can see we had a nice bar that suggests a continuation. As the sellers pushed it down, the buyers pushed it back up. The next bar, again, much like this one right here, we had that push up, and then it closed back below that level. And from there, we never really looked back. It's been straight down since. So essentially, anyone who got long here put a stop right here. Those guys got stopped out. Anybody with a looser stop had a stop down here. Those guys got stopped out. And when we did manage to break this level right here, pretty much anyone who had gotten long in the last 4 months or so is now underwater and losing position. So as price does manage to move lower, you can see that price is opening up for the week right here, right? And we're already trading lower. So essentially what we can expect is essentially a long squeeze, and anybody who's long is going to start feeling some pain, and as they exit, they add selling pressure to the market, which essentially pushes price down further. But the important thing to note is, now that we have our bias from the higher time frames, it makes sense that we would see some further continuation down, and we can actually start talking about lower targets. So in terms of targets here, we can see we have some support right here and right here. Again here, so there's a good chance that the market will probably stall somewhere in this area before we see some sellers start to take profit. And again, anyone who's a monthly trading the monthly chart was probably going to look for a lower swing low again. So that's still a ways down, and we're looking at over 1,000 pips in that move right there. But the near-term traders, we'll look for these levels right here, and then of course, if you're an intraday trader, you look for levels that are even closer. But at least for me, moving down to a hourly time frame, this is what I'll be looking for early in the week. So as since we are, or rather were, in an area of support, before the open, it looks like we gapped down quite a bit here. But initially, what I was thinking, was that price was coming into this area right here. And you can see we have, many swing highs here. Price came up, got rejected, a handful of times before we finally broke through. So the idea being that there should be some support in this area. And my initial plan was, of course, not to buy this blindly, but rather to wait and see if we could actually break this downward trend line. You can see here we do have these, again, a series of lower swing lows and lower swing highs, which tells us we have a downtrend, and it seems like it's pretty steep. So oftentimes what happens is some people start to think, okay, it's gone too far, it's going to correct now, and there's really no reason why this can't keep going further to the downside, especially with those Eurozone problems. And on Friday we had some news come out with unemployment numbers and whatnot. We can talk about that in a second here. But the reality is price can continue down as as long as it wants to, and there's no ifs, ands, or buts about it. So for me at least, I was looking for, okay, price came into this area of support, and I was looking for maybe this trend line to break and also a breach of this resistance. And with that, I would imagine that price does move up to this swing point right here, which is the next logical place of resistance. So ideally we'd probably have some sort of price action here, probably sideways, before a nice break up, and an opportunity to get long until here. And then from there, I would imagine the bigger players, the banks, the hedge funds, would probably want to get short with the overall trend movement on the weekly and monthly time frames and take this thing back to the downside. Again, if we don't get that, and this is exactly what's happening right here, you can see the open is considerably lower. We might even get a gap fill here, but the idea being that I'll switch to more of an intraday trading mode, and from there I'll take 20, 30 pips wherever I can get them and get out, because I do know that as this continues down, the market is more psychology than anything else. And if you look at it in that sense, people who are short from here, especially the amateurs, will start to get scared that they're going to get caught in a short covering rally, and with that they'll start to cover their trades. And if it does happen, that makes it more likely for us to actually bounce. But again, we talked about there's no reason why it can't keep going lower. And we can touch really quickly on the trade Friday with the unemployment numbers. So if we look at this price action right in this area, this was when the number was released, and it was better than expected. So if we look at the way that the euro US dollar is quoted, the US dollar is on the bottom side of that cross. So essentially a better than expected number is quite bullish for the US dollar, which would mean dollar strength. So the initial reaction was interesting because it was to the upside, which is not what I would expect, and that pretty much set up for a very good trade to the downside. Essentially, you could have faded the initial move, and later in the day that things did get straightened out, and we had a nice correction down for maybe 100 pips or so. So again, with the Eurozone problems and the recent dollar strength, it's not surprising to see that we do gap down here, and probably see some more downside in the future. So again, I'll be updating the blog throughout the week here, and we'll see how it goes. Thanks for watching.